Down 28% in 2022. Is Apple stock a buy for 2023? I'm going to answer that question in this video, so stay tuned. First thing I'm going to look at to answer that question is Apple's revenue growth going back to 2014. And this is quarterly, which is why you see the fluctuations in the seasonality of the business. But importantly, what you do see is a nice and steady upward trend going back all of these years. And this has been on the back of the iPhone. It's been arguably the most popular consumer product of all time. It's in its what, 14th, 15th generation now. Apple has been continuously iterating on this product and allowing itself to generate healthy profit margins in that regard. And of course, if I see revenue growing, I also want to see operating income rising alongside of it. And that is what you see with Apple here. Operating income from 2014 to 2022, a nice steady upward trend, finishing with $25 billion in operating income in its most recent quarter. Really, really impressive profit growth and absolute levels of profit for Apple. Next thing I want to look at is cash flow from operations. And I also want to see upward trend, and I want to see the cash flow from operations matching the operating income, because I want the cash to match the accounting profits so that I know there isn't some kind of difference between cash flow and operating profits. Sometimes companies can use some accounting gimmicks and some accounting wizardry to make their sales and profits look better than their cash flows are. And so looking at the cash flow from operations gives you a kind of double check to make sure that, okay, cash flow is rising along with profits. These are high quality profits. They're not profits that you need to be skeptical of. All right, and finally, I want to look at Apple's valuation to determine if the stock is a buy. Just because the stock has fallen does not necessarily mean that it's cheap. You got to look at what you're getting in terms of how much earnings are you getting for your price and how much free cash flow are you getting for the price. It's not just the absolute level of the price that matters, whether it's $100 or it's $90. It's how much earnings are you getting for those $90, and how much cash flow are you getting for that $90, right? So with Apple, you're paying 20 times earnings. Its PE ratio is 20.82, so you're paying essentially 21 times earnings, which is not expensive to pay for a stock, especially one that is growing as consistently as Apple has grown its revenue and profits. And if you look at its price to free cash flow, also 18.64, also not expensive. And also, if you look at it historically, this is about the cheapest valuation you've been able to buy Apple stock when measured by the price to earnings and price to free cash flow ratio. And then looking at the forward price to earnings ratio, so this is measuring the valuation looking at what analysts expect its earnings to be over the next 4 quarters instead of looking at its earnings historically. And looking at that is trading at a price to earnings of 20.52. So that confirms again what the TTM price to earnings was telling us, that it's not very expensive and it's the cheapest that it's been all year in this metric. So overall, to answer the question, is Apple stock a buy for 2023? I would say yes, it is a buy for 2023. That isn't to say that there aren't some risks that investors should pay attention to, namely the production problems it's incurring in China with the with the rising COVID cases and supply chain issues that it's having. Still, given those, I think that with this valuation, Apple stock is a reasonable stock to buy for 2023. All right, so that's all I've got for this video. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.